Yo guys, so based on popular demand on my team that I should explain how we can use SPDB indicator and strategy to make money on Deriv, especially on volatility index. So I decided to make this video today. Firstly, this video we are going to make use of volatility 100 index on 1 hour time frame. Firstly, you can see when let's start from here. This is April 2021. So let's do it this way. So we are going to be recording our loss and our profits here to know if actually this strategy is profitable or not. So let's get started. So what you can see here, you can see the market is kind of trending down here. So why do you see it's trending down? Can you see the red, which I mean this one? Let me show it to you. This down is actually going down. Can you see it's laying down? It actually shows that is on down trend, and this up also is going down, which actually shows is going down. So what are we now going to look for? What we're going to look for is when we have a reversal. Can you see this is the last down candle here? This is the last down candle, and it break this one. It actually break this one before this one come up. So and this is the previous one before it comes here. The previous one is called before it comes here, which means if market now come up, to this side, if you break this side, let's join our line to identify when it actually break it. It's a short explanation. Can you see this is where we want it to break? Can you see this is where it break it? This is where it actually break it. Can you see it's break it here? It's break it here. So after it's break it, what we will look for now for you to know when you're going to place your buy trade is an FEG. When you see a reversal candle and on an FEG, so let's see where we have our reversal candle after it goes up and comes here. If you realize these things very well, you realize that there is an FEG here, there is an LFG around this place. This is the LFG, this is the buy FEG around here. But the reason why we are not placing this trade here because the candle doesn't give us signs of say that the candle is going to buy. We don't have buy candle here, so it's on this LFG. Can you see we don't have any other FEG until it comes to this place? Can you see until it's come to this place? And if you realize something on this LFG here, we have what was it called? We have candle that show buy here. Can you see? So which means we are going to place our buy, and is of two ways. So you can chase your first. This is how you set it. You set your take profit. Stop loss will be below the LFG candle. Can you see which is how many points? That's 130 pips. So 130 pips, you can make use of 1:2, or you target the higher high since we are buy. You understand? So this will be our take profit, or you target 260 pips, which is 1:2. So if it is 260 pips, can you say so 260 pips? Can you see our 260 pips actually achieve? But if you target our higher high, which is this place, that's 355 pips. So let's record our 355 pips profit here. 355 profit, 355 profit. So so that's the first one. Let's look for another signal here. Can you see we are on uptrend here? We are on uptrend. When we are on uptrend, what we're going to be looking for now is when the market will see opportunity for us to sell. When we are looking for opportunity to sell, although we can trade continuous candle for buy as well, we can trade opportunity for buy, but the easiest one for you to make profit on Deriv is by you making use of this strategy that I'm talking about now. So quick one, let's see opportunity for sell. Can you see the markets have been consolidating here, and we have been seeing like this thing is ready for selling. Yeah, so in this kind of situations, can you see the last one before you have break of structure is on this place. This one is on this break of structure. Can you see we have it here? And can you see after this break of structure, this is the one that pull out this break of structure, and after this break of structure, can you see we don't actually have any other one that break this higher high, and the one that happened before this one is here, is this place, but it's more advisable for us to use this one. And the reason why it is that this one that have come below this one, so we are going to make use of this one. Let's draw our line here to see how it actually goes. Let's join the way we do it that time. Can you see? And let's see. Can you see? Assuming we have used this one, we have placed our trade. Can you see? It actually don't break it there. Can you see it doesn't break it there? So it doesn't break it. It doesn't break it, and it goes up back. It goes up back. Let's say. So can you see we have? So can you see we have, since we have some consolidation here, we have some consolidations, and we have seen that the market is ready to break some share here. So we have two consolidations, which means market is ready for reversal, and the market is on down. So we are going to make use of the previous two downs, which is this one that break here, and what is it called? Can you say, yeah, this one and this one, because that's the previous one. So we go to move our this thing to here. So after we have this buy that break here, so we go to look for our buy market. Can you see it actually break here, and after this break here, can you see the market actually reverse back to this place, to the FEG in this place. Let me mark the FEG. So this is the FEG here, this is the FEG here. No trade is better than lose trade. So that's it about the strategy. Can you see? So let's say the reversal candle, let's say we make use of this buy candle here, we make use of this buy candle here, and the candle that created here, let's say we made the buy candle here, and the candle that created the FEG is this candle, is the end of this candle. So let's try to see how it goes. So yeah, let's say, so that's 136 pips as well. And another thing, can you see this is a higher high, this is a higher high. Can you see something here that I want you to understand here? This, can you see the higher high itself is kind of little bit for something we want to make use of. So in this kind of situations, I always avoid this kind of trade. Because the higher high is very low, which means the market can actually go down. So I would have leave this kind of market, although if I place this market, it will have been profit, since this place will be our stop loss. And if you see, if you going to 230 pips, it's actually make our 260 pips, but I'm not going to make use of this one. So let's say I don't place this trade, and I actually wait till the market come back. And if you realize this market come to the FEG here, and we have our, can you see there is an FEG here, and the market reverse immediately on this FEG. So, and if I calculate it, that's how many pips? That's 235 pips, and now we go targeting 470 pips. So the next higher high, which is this place, 470 pips. So let's see how it goes. So let's say this is my take profit 1, 289 pips, and take profit 2, which is this place. Can you see it actually go a long way, which is 686 pips. Note one thing, this thing is not an only pips, 686 pips. Yeah, so let's continue. So we are still going up, we are still going up. So we have what's it called, that's 686 pips. So from what we are doing now, can you see we are going now, we are going now, we are going now. And if you realize something here, can you see the market have been trying to break our structure? So we have been trying to break this SPD. So here it break the SPD, it's break the our SPD here. So once it break our SPD here, it's come back to here. Can you see the market have want to be trending down? It's want to be trending down. Can you see the buy level is now coming down, which means this is our first, we are trading buy before, this is our previous buy, and the buy before that one is actually this one, which means we are making use of this one this time. We are making use of this one this time to look for our sell trade. So let's mark this place. Let me show you on the chart. So we are making use of this one after it's break this one, so and we're looking for our buy back. So let me move my candle to this place. Let me move my, so let's see what's happening. Can you see it actually break it? So when it break it here, and it reverse back, and it's come to our what's it called here, there is an FEG here and an FEG here. So and it's come back to our FEG, and we have our reverse candle here. You have our reverse candle here, which means our stop loss will be here. Our stop loss will be here, which is how many pips? 194 pips, and 1:2, that will be 400 minus 8 and 16, that will be 300 and something pips sharp. So let's say yeah, what's happening to my PC? Yeah, can you see we are looking for 190 pips? Our next II 196 pips. Can you see we already make our 1:1? We are taking 1:1, which means we have adjusted your stop loss to break even when you have 1:1. And can you see the market actually bounce back and hit our stop loss? So well, that means we are closing, assuming here we are closing here, we have closed our profit here, which is, let's say, let's record 10 pips since it's breaking even. So we move that way again, we move that way. Now we are looking for buy, we are not looking for sell anymore. So all this we won't say because it make profit, don't be greedy. So we'll be looking for we'll be looking for buy rather. So can you see we have consolidation here? We have consolidation. So when we have consolidation, we mark, since we are looking, since it's buy, can you see these are previous buy and these are previous buy? So I'll be looking into this place now to look for my buy, opportunity after the market break structure there. But unfortunately, can you see the market later break this structure and continue buying, which means that zone and market is no more valid since it are actually break the SPDB here. So we move down. So we are selling and our previous structures. So can you see we have another consolidation here? So we have another consolidation here, which means we are going to look for previous one. So the previous one to break it is this one, and the next one will be around this place. So we mark this place and we put our indicator there to show us when it actually break it. Can you see? Yeah, so that place is no more functioning as well again. We are no more going to trade that place, that zone anymore again. So since it actually break it here, can you see it have actually break the other one here? So let's say, yeah, so it have reversed back in this zone, which means, and if you realize something with this place, can you see this is the first one, this is the first one that break it down, and if this one is the first one, can you see when this one break it? So this one will be the second one. Can you see it actually break it here first, and this one also come down to break it, or this one. But let's say you mark this one, you mark it to mark this one. If this one fall, this is the first one, and this is the second one. So let's say Can you see it actually break both of it? So we are looking for our buy. Can you see? Can you see? So it will be next, our next higher on 1 ratio 2. So let's see, this is our first one, right? This is our first one. Can you see this is our first one? After it's break both of it and it's come back to this zone, can you see this is our FEGA? That is an FEGA. There is an FEG around this place. Can you see the FEG? There's an FEG there. So in that FEG we have a reverse candle. Can you see the reverse candle here, which is a very good reverse candle, an engulfing candle. So in our engulfing candle, on our engulfing candle, so we are going to place our trade. So let's see how it goes. So let's see what's our stop loss. So our stop loss will be, what's it called, that's 159 pips. Let's say 160 pips. 160 pips. So 160 pips, which means our take profit will be, our take profit target will be like 1:2. That's 360 pips, or our next high, our next, can you see this is our next one? So and let's say it's actually 340, but I don't touch it here. 360, no, we are looking for 360, right? We are looking for 360. Our 1:2 actually achieve. We achieve our 1:2 here. Oh, why is this PC doing me? 360. Oh, we don't achieve our 360 pips. Can you see? It's around this place. So it's around this place. So let's say 351 pips. 351 pips. 351 pips. So yeah, so can you see the market actually come back to retouch that same zone since? And do you know the reason why it doesn't? When we see market come to that same zone to clear the liquidity and give you another engulfing, good engulfing, can you see? And just because the market doesn't clear the previous high before, you can actually place the trade. Can you see what actually happened? We trigger to our next higher high. You can easily target this kind of reversal when it's reversed here. Can you see? And you make a profit. Can you see the market firstly come down and boom, it make our profit and actually clears this one. Can you see? That's another, like, let's say we make use of this one. That's what is it called? 306 pips. 306 pips. No, it's one thing. This thing is not an only pips. It makes some losses sometimes, but it hardly make losses. Although it's work on lower time frame, but I'm actually making use of this higher time frame to do this explanation. So let's move to another one. Can you see, after we place our buy now, what are we looking for? We are looking for so. Although there is still some other strategy I'm going to teach to some people with these indicators on how to make a lot of signals, how to place a lot of trades. Like, can you see when we have some consolidation and later breaks and kind of looking for opportunity for you to place a trade? So can you see now we have some consolidations there. So after we have some consolidations, this is what you have to look like. You have to look for. Can you see this is our last one? This is our last one, and we looking for another previous one, which is this place, before we see some recent consolidation. If you look the market, I don't look what's happening in the market. Can you see? Let's see if market actually break it. Let's see if market actually break it. Can you see? Yeah, so we have it break it here. Can you see it break it in? And fortunately, where it break it, we have an FEGD. We have FEGD, and after we have an FEG, can you see we have reverse candle here, which is and we're going to place our trade here. Which is 196 pips, and 196 pips to, let's say, 200 pips rather, 200 pips to 1:2, 400 pips take profit we're looking for. Yeah, so we don't make it, we actually make 1:1, which means on 1:1 we target our next higher high based on the instructions I gave. I say it's either you target your next higher high or you target 1:2. But most times me, I normally target 1 ratio, my higher high. Which if it is my higher high, I'll have make my profit here. Here, can you see? This is 173 pips. This is 173 pips, and can you see? Let's record down 173 pips. 173 pips. Most times that we actually make use of 1:2 is with the 1:2 is before the next higher high or lower low. So that's when the 1:2 actually functions well. So now can you see the market? If you realize the market here, you have realized the market is ready to trade change movement to uptrend. Can you see it actually break our this one here? It actually break our this one. It break the first reversal, which our next one, if it break the next ones there, which is here. Let me put it here. Yeah, which our next one here. Can you see? This is the first one, and this will be the second one. If you break it, and we have, yeah. Can you see? It actually break it here. Can you see? It actually break it here. But when it break it, we don't have reverse on. We don't have any reverse candle for buy on this FUG, and it comes down. Can you see? We don't have anything, so we are not placing any trade here. Although some people will have placed the trade here, but I'm not placing any trade here. I'm not placing any fucking trade here. So we'll let it move. So I'm not placing any trade here. And the reason why I'm not placing any trade here is because I don't have my FEG is not corresponding to my FEG. But the reason why some other people will have placed and trade here is there is an IFEG here. There is an IFEG. Can you see the IFEG around this place? And this is a support zone, which is a resistance zone that have changed to support zone. Some people will have placed a trade, but I don't place that kind of trade. It's better to, I'm just explaining to you, but it's better to lose some. It's better to miss trade than to lose trade. So let's say, so can you see it actually goes well? So we don't place the trade, we miss the trade, and after this, we are actually buying. You're actually buying. Can you see this is the first one that break it, and this is the second one? So if we set it that we're looking for buy, since the market have started to be breaking the buying zones, so this is the first one, this is the second one. So after the market break it, can you see the market actually come back, and we have an FEG, here, and we have what's it called, reverse candles here. So reverse candles here, which means this place. Can you see the SL will be the below of the candle here, which is 86 pips, and the upper high or 1/2. Can you see that's 140 pips? 140 pips. That fucking 140 pips. And another thing we have to consider here is I'm not supposed to say this one, so I'm not supposed to make use of this signal I just placed now, because the reason why it is, if you realize this buy candle here, I've actually go beyond our FEG. So let me just say I should leave that kind of trade. So can you see, let's assume I leave that kind of trade. Let's assume I leave that kind of trade and I wait for it to come back again. Can you see this one here also? This one also here also. Yeah, I will have make use of this one. So if I make use of this one, can you see this one is still under the FEG? It's under the FEG, which is how many pips? 32 pips. 1:2. It says the 1:2 is before the higher high. That will be 64 pips. 64 pips with this place. 64 pips. Where is the 64 pips? Yeah, which means we have taken our profit around this place. We have taken our profit around this place. 64 pips. So yeah, so another thing there is, some people would have been like, why don't I take the trade when it comes there? But the reason why I actually don't, the reason why I'll say I can take the trade is because it haven't break more than 1 year. Assuming it comes up, this is the previous one I'll be looking for before I can buy. So some people will have take this trade based on the reversal candle here. Can you see the reversal candle is actually strong, and that's how many pips? 107 pips. So which means we're targeting the next higher high, lower low, which is where we market reverse back, which is this place, or based on 1:2, 1:1. That's we are looking for 222 pips. Can you see 220 pips? Can you see the 220 pips? 22 pips is around here. It's around our higher high here. Yeah, can you see? That's when the 1:2 always they involve to 22 pips. Can you see? So let's say, can you see the market starting flowing back? So we are looking for another, what's it called? We are looking for another we are actually take our sell now. We are looking for buy. So can you see? Yeah, so now we have opportunities to break the first one, and if once it break the first one, we have the second one here. Can you see? This is the first one when the market reversed. This is the second one when the candle gave us stuff ready to place here, and let's set it here if market actually break it and we have our FEG. Can you see? But the issues that is, can you see the market actually did not go beyond it? Can you see it reversed exactly here, which means the market uses as an resistance level. In this kind of situation, this is as resistance level. Yeah, so can you see this is exactly what I told you then. Can you see? I'm supposed to have placed this right here, but because this seller have already go beyond our FEG, so that's the reason why we are not taking it. Because I already go to beyond our FEG. So yeah, and if you look one thing here, the quick one, can you see in this kind of situation, because we have not able to place our sell here, so we won't take the trade, or kind of situations like we already have it already break our saw before, so and it's break our first window. Can you see this is the buy that actually break it here, and previous one, let's say the previous one. Yeah, can you see the previous one? So we're looking for yeah, this is where it's break it successfully. Yeah, can you see the break here is very successful? It's very clear that something have already break here. It's very clear. Can you see the market break it and come back to that our zone, and we have an FEG here, we have our demand zones, we have a resistance level here. Can you see it actually come to that resistance level? Can you see? Let me show it to you, and the FEG, and we have a reverse candle here. So it's kind of situations that our stop loss will be 113 pips. So 113 pips, or the 130 pips, that will be 226 pips, or we target the next reverse, the next sell signal we have 236 pips. Can you see? So which means we are targeting here, we'll have to take our profit here. So which means 236 pips self actually comes before the 236 pips. Can you see? 108, let's say 110. So we are looking for 220 pips. So and 220 pips actually come before the our sell signal here. So which means 220 pips will be our record 20 pips. So yeah, let me just stay here, let me stop here. So let me stop here and move to the signal I'm looking for. Can you see in this kind of situation now? So I'm looking for buy signal now, which means this is the first one, and this is the second one. I'm looking for buy signal around here. Once it break it here, so I will look for my signal. So thank you for watching, thank you for all your support, thank you for everything. So love you guys.